Today, I'm going to show you what credit repair actually is, how it works, why it's 100% legal, and I'll break down the federal laws that make it all possible. Most people think credit repair is some sketchy scam, and by the end of this video, you're going to understand why it's the complete opposite, and it's all legal, strategic moves that you can make with your finances. If this is your first time here, I'm James Jang, and I help everyday people repair bad credit, get funding, and stop playing defense with their money. That's exactly what we do every day at Limitless Financial Solutions, where we've helped over 1,300 plus clients achieve 800 plus credit scores and build long-lasting financial freedom. My number one goal here is to make credit and financial education accessible to everyone so they no longer have to live feeling stuck. Now, here's the problem. Most people have no idea what credit repair actually is. They think it's some shady loophole. They think it's fake, or they think, oh, it's just these companies scamming people. And because of that confusion, they sit there with bad credit for years, paying thousands of dollars more than they actually should. They also end up getting denied for opportunity, all because they don't understand that they have legal rights under the federal law that protect them, which leads to people accepting inaccurate information on their credit reports as the truth. It leads to paying higher interest rates on everything. It leads to getting denied for homes, cars, business loans, and investment opportunities, even when those denials are based on incorrect data. So that's why in this video, I'm going to break down exactly what credit repair is, how it works legally, and why understanding this could save you tens of thousands of dollars in the long run. But before we dive in, I just want to give a quick disclaimer. Everything that I'm about to share is strictly for educational purposes only. This is not financial advice, this is not legal advice, and I'm teaching you how the process works so that you can make informed decisions. All right, so without further ado, let's get into it. So first up, what is credit repair at its core? Well, it's very simple. Credit repair is the process of reviewing your credit report line by line to make sure everything on it is accurate, verifiable, and legally reported. Your credit report is not just some magical algorithm up in the cloud. It's a manual record. It's a database that banks, creditors, and collections agencies update by hand. And just like any manual system, it makes mistakes, lots of them. So let me give you an example. Let's say you have a medical bill from 3 years ago for $500. You paid it, but the hospital's billing department never updated their credit bureaus. Maybe they reported it to one bureau and not the other two. Maybe they reported the wrong amount, $800 instead of $500. Or maybe they reported it as unpaid when you have the physical receipt showing that you actually did pay it. You see, these things happen every single day. Credit bureaus process millions of updates manually, and errors slip through constantly. Collections agencies buy debt portfolios and report information without even verifying it. Creditors merge, get acquired, sell accounts, and the data gets messy in the transition. Your credit report is supposed to be accurate, but the reality is it's full of errors, outdated information, and things that shouldn't even be on there. And here's what most people simply do not understand. If something on your report is wrong, outdated, duplicated, incomplete, or not legally verified, then under the federal law, specifically the Fair Credit Reporting Act, it does not have the right to stay on your report, period. It needs to be disputed and either corrected or completely removed. And that's what credit repair is. It's not a hack. It's not a loophole. It's using your legal rights for accuracy. And this isn't based on emotions or feelings. It's based on the law. And guess what? You cannot argue with the law. The US federal consumer laws state that your credit report must be 100% accurate. And if it's not, it must be corrected ASAP. Now, here's something that most people get wrong. Credit repair is not just about boosting your score. The overall goal is a clean, accurate credit profile as a whole. Your credit score is just a calculation based on the data that is in your report. So if the data is wrong, your score will not be accurate. And when you remove inaccurate negative items, your score naturally goes up because the algorithm now sees you as less risky. So let me explain how this works. Your credit score is calculated using 5 main factors: payment history, credit utilization, length of credit history, new credits, and credit mix. If you have inaccurate late payments or collections showing on your credit report, that's going to tank your payment history. If you have maxed out credit cards, then that's going to increase your debt utilization, which is also going to tank your credit score, and so on and so forth. So when you remove those inaccurate items through legal credit repair, the algorithm starts recalculating. It no longer sees those negative remarks, and then as a result, your score goes up. Not because you hacked anything, but because the data is now accurate. You don't hack a score. You fix the data feeding the score. And there's a big difference between the two. And here's why this matters. You're not just playing games with the system. You're not trying to trick anyone. You're simply demanding that your credit report reflects the truth and nothing but the truth. That's your legal right as a consumer. So you might be asking, James, what kind of negative items can credit repair actually target? So here's a list. Late payments. Even if you were actually late, if the creditor can't verify it or if the date of the reporting is wrong, it can be disputed. Collections, especially collections that have been sold multiple times, where the collection agency can't prove you legally own the debt. It can be disputed and deleted. Charge-offs. Well, these accounts have been written off by the original creditor as a loss on their income, but they're still showing on your credit report and most of the time inaccurately. So this can also be disputed and deleted. Repossessions. If the details are wrong, if the balances are incorrect, or if it's past the reporting period, it can be disputed and deleted as well. Even bankruptcies, when applicable, especially when these errors are reported incorrectly, and if it's past a 7 to 10 year reporting window, it can be disputed and removed off of your credit report. Student loans, late payments, incorrect balances, or loans reporting as defaulted when they're actually in deferment or forbearance can also be deleted 100% of the time. Medical debt, absolutely. And this one's actually notorious for being reported inaccurately because hospitals and billing companies don't always verify information before sending it to collections. Therefore, it is a violation of the law and it can be deleted off of your credit report. Hard inquiries. Inquiries you didn't authorize or inquiries that are older than 2 years should not be reporting onto your credit report. How about fraud or identity theft? Accounts that don't belong to you, if you were a victim of identity theft, accounts that are opened by random people using your information, or just straight up reporting errors can be deleted and disputed. Even duplicate accounts with the same debt showing up multiple times, often because it's been sold from one collection agency to another, can also be deleted. Let's talk about outdated accounts. Negative items that are past the 7-year threshold that are still reporting on your credit report should be automatically removed when they weren't, and that can also be deleted because it is inaccurate. And even incorrect personal information, your wrong name, wrong birthday, wrong addresses, wrong employers, even wrong social security numbers that are on your credit report can be disputed and deleted. We've seen thousands of times where we've had clients have addresses reported that they never even lived at, and that's harmed them in many ways that they could have ever believed. If your report shows you living at an address you've never even lived at, that's clearly an error, and that needs to be corrected. If it appears on your credit report, it must follow the Fair Credit Reporting Act, and if it doesn't, it can be challenged and disputed. That's the foundation of the entire process. And here's the key. This isn't just about getting away with something. It's about accuracy. If you actually have a late payment that's accurately reported and the creditor can verify it with documentation, then it stays. But if they can't verify it, if the date is wrong, if the amount is wrong, if the loan term is wrong, then it doesn't have the legal right to be there, period. Now, something that most people don't realize is that credit repair doesn't just protect you financially, it protects you legally. Negative accounts on your credit report can follow you in ways that go beyond just your credit score itself. Old debts can be used to sue you. They can be used to garnish your wages. They can be used to levy your bank account, which means freezing your assets and automatically taking money out of your savings. Let me break down how this actually works. Let's say you have old credit card debt 5 years ago. It got sent to collections and you ignored it because you couldn't afford to pay it at the time. Totally fine. But that collection agency can and often will file a lawsuit against you to get a judgment. And if they get a judgment, they can then garnish your wages, and in most states, it can take up to 25% of your paycheck automatically until the balance is fully paid back. And you don't get a choice. It gets taken even before you see it. They can also levy your bank account, meaning you wake up one morning, try to use your debit card, and it gets declined. You check your account and it's frozen. The court has authorized the creditor to take money directly from your savings or checkings account to pay the debt back. This is 100% real. It's happened to many of our clients. This happens to everyday people. And the scary part is you might not even know it's coming until it's actually happening. And then it's too late. But here's where credit repair comes in. When you dispute an account, the creditor or collection agency can't verify it. That account gets removed from your credit report completely. And once it's removed, here's what happens. The creditor or collection agency loses a huge amount of leverage. If they can't verify the debt to the credit bureaus, they're going to have a very difficult time verifying it in court. And if they try to sue you and you show up with proof proof that they couldn't even verify the debt when you dispute it, the judge is seriously going to question whether they even have the documentation to prove that you actually owe the money. Credit repair forces creditors and collectors to either prove their claim or remove it. And here's the key. Once it's removed from your credit report, it's gone. You've eliminated the legal exposure. So this isn't just about getting better interest rates. It's about protecting yourself from lawsuits, wage garnishment, and bank levies. It's about making sure that if someone is going to come after you legally, they better have the proof to back it up. And again, this is all federal law based. It isn't about whether you morally owe the debt. This is about whether they can legally prove that you owe it, whether your information is accurate, and whether they have the right to actually report it. You cannot argue the law. The law is the law. Now, if you're watching this and you're thinking, okay, I have negative items on my credit report and I need to handle this. That's exactly what we do every single day at my company, Limitless Financial Solutions. We help people remove inaccurate items, clean up their credit, and protect themselves legally. And if you want to talk about working together, go ahead and click the first link in the description where it'll prompt you to message me directly on Instagram to start a chat. And yes, you're actually going to be talking to me, not some sort of robot AI. Or if you'd like to directly book a call with me and my team of experts, click the second link in the description and just fill out the super short application to see if you're a good fit to work with us. But for now, let's keep going because I need to show you the laws that make all of this possible. Moving on, now we're going to talk about the most important part of this entire video, the US federal consumer laws that make credit repair possible in the first place. And although I've repeated this multiple times, credit repair is 100% legal based. Does the information on your credit report actually comply with the federal law? If yes, cool, it stays. If no, it has to go. That's it. And that's exactly how credit repair works. It's not built on opinions. It's built on federal statutes that are non-negotiable. Let me show you. The first and most important law is called the Fair Credit Reporting Act, otherwise known as the FCRA. This law, found in 15 U.S. Code Section 1681, states that every single thing on your credit report must be reported 100% accurately, complete, and verifiable. Not close enough, not probably right, or not good enough. Not even 99.9% accurate. It has to be 100% accurate. So let me repeat that because it's critical. It must be 100% accurate. If a late payment is reported as being 60 days late when it's actually 30 days late, that's inaccurate. If a collection account shows a balance of $1,200 when it's only supposed to be $1,000, that's inaccurate. If an account shows it was opened in 2019 when it was actually opened in 2020, that is indeed inaccurate. And under the Fair Credit Reporting Act, if something is inaccurate, it cannot stay on your credit report. And here's how the process works. If you dispute an item on your credit report, the credit bureaus, Experian, Equifax, and TransUnion legally have 30 days to investigate it and respond. They contact the creditor or the collection agency and say, hey, the person is disputing this account. Can you please verify that all of the information is accurate? And here's the key. If the creditor cannot verify the information as 100% accurate, the bureau is legally required to correct it or delete it. Not maybe delete it, not think about deleting it. They are legally required to delete it. And this is the backbone of credit repair. It forces proof, not opinions. The burden of proof is on the creditor and the bureau, not on you to prove it's wrong. They have to prove it's right. So let me give you a real life example. We had a client who had a collection account for a medical bill. She disputed it because the amount was wrong. The collection agency was reporting that the amount was $2,400 when the actual bill was only $1,800. We sent a dispute letter to the credit bureau citing the Fair Credit Reporting Act, and we demanded verification. The bureau contacted the collection agency. The collection agency couldn't provide documentation showing that the $2,400 was actually accurate. So the bureau had two choices: correct the amount or delete the account entirely. And if they don't delete it, my client was actually entitled to $1,000 of compensation per negative account. So they ended up deleting it. It was gone. And her credit score went up 55 points just from that one removal. That's the power of the Fair Credit Reporting Act. And once again, you cannot argue the law. The second law is the Fair Debt Collection Practices Act, otherwise known as the FDCPA. The law controls how, when, and if collectors are allowed to contact you to report a debt. And just like the FCRA, this is a non-negotiable law. Debt collectors don't get to decide whether they follow this. They follow it or they're breaking the law. Now, here's what they cannot do. You want to get out a pen and paper and write this down because it's super important. They cannot contact you before 8 a.m. or after 9 p.m. in your local time zone. If a collector calls you at 7:30 in the morning or 10 p.m. at night, they are violating the FDCPA. They cannot harass you. They cannot call you repeatedly with the intent to annoy or abuse you. And they cannot threaten lawsuits that they can't or won't actually file. They cannot use deceptive language or pretend to be someone that they're not just to collect debt, such as claiming to be a law firm when they're just a collections agency. And here's the big one. If you challenge a debt, collectors must provide 3 things. 1, that the debt actually belongs to you, not someone with a similar name, not someone who used to live at your address, but you specifically. 2, that they legally own the debt. If the debt has been sold from the original creditor to a collections agency and they sold it again to another collection agency, they need to provide a complete chain of ownership showing that they have the legal right to actually collect it. And number 3, that the balance is accurate. If they're claiming that you owe $3,000, they need to show where that number comes from. The original amount, any interest fees that are related, all have to be documented. And if they cannot validate all 3 of those things properly, they lose the legal rights to continue collecting, and they cannot report the debt to the credit bureau. And here's the kicker. They cannot report information that they can't verify. If the balance is wrong, if the dates are wrong, if the ownership is unclear, the account is legally disputable. We had a client, Lucas, who had a collections account from a debt that had been sold 4 different times. The current collection agency couldn't provide the chain of ownership. They couldn't prove that they legally owned the debt. So we challenged it, and under the Fair Debt Collection Practices Act, the account was removed within 45 days. And as a result, his score jumped up 65 points just from that one account. Again, this isn't about emotions. This isn't about whether the client morally owned the money. This is about legal compliance. Can you prove that you own the debt? No? Then it can't be reported. And you can't argue with that. It's the federal law. And the third law is called the Fair Credit Billing Act, the FDCPA. It protects you from billing errors, unauthorized charges, and incorrect balances on credit accounts. It gives you the right to formally dispute billing mistakes and forces creditors to actually investigate. And here's what's powerful about this. During an active dispute, the creditors cannot treat the account as delinquent for the disputed amount. So let me give you a real life example of what that means. Let's say you have a credit card and you see an $800 charge that you never authorized. So you dispute it. Under the Fair Credit Billing Act, you can dispute the charge, and while the dispute is active, the credit card company cannot report that $800 as late or unpaid or charge you interest on it. They also can't send the $800 to collections or close your account for non-payment of that $800 balance. They have to legally investigate. And if they can't prove that the charge was authorized and accurate, they have to remove it completely. This law is especially powerful for credit cards and revolving accounts where balances and charges can be disputed directly. We've used this to help many clients remove late payments that were caused by billing errors, not by actually missed payments. Again, this is the federal law. Not opinions, not feelings, but the law. And you can't argue with the law. So, credit repair uses all 3 of these laws together. The Fair Credit Reporting Act, the Fair Debt Collection Practices Act, and the Fair Credit Billing Act to hold creditors and credit bureaus accountable. Again, it's not a trick, it's not a scam, it's not even a loophole. It's just the law. And these laws were created specifically to protect consumers from inaccurate reportings and abusive collection practices. And if you understand how to use them, you can clean up your credit legally and permanently. Here's what I need you to understand. When we dispute an item on your credit report, we're not asking for a favor. We're not begging. And we're certainly not saying, please remove this because I feel bad. We're saying under 15 U.S. Code, Section 1681, you are legally required to verify this information as 100% accurate. And if you cannot do that within 30 days, you are legally required to remove it. This is not emotional. This is not arguable. This is, again, just the law. The credit bureaus cannot argue the law. The creditors cannot argue the law. And the debt collectors certainly cannot argue the law. The law is the law, and that's exactly how and why credit repair works. Now, here's why repairing your credit matters beyond just lowering your interest rates. When you apply for a loan, lenders don't just look at your credit score. They look at your entire credit profile. They look at the number of negative accounts on your credit report. They look at the total debt that you owe. They look at how recent your negative remarks are. They look at the overall strength of your entire credit profile. And let me give you a real world example. Let's say there are 2 people that apply for the same car loan. Both have a 680 credit score. On paper, they look identical. Person A has a 680 credit score with no negative items on their credit report. Their credit history is clean. They just have a couple of credit cards that they pay on time. Maybe an old student loan that's already been paid off, etc., etc. No collections, no late payments, and no charge-offs. Now, Person B also has a 680 credit score, but their report is a mess. They have 2 collections accounts, a charge-off, and multiple hard inquiries from the past 2 years. Their score is only a 680 because they've been doing some rebuilding slowly, but all of that negative history is still visible. Who do you think actually gets approved? Who do you think actually gets better interest rates? Who do you think actually gets a higher credit limit? Obviously, it's going to be person A every single time because the lender looks at person A and sees low risk, clean credit history, and wow, this person is a responsible borrower. They get approved at a 4.5% interest rate on a $30,000 loan, and at the same time, they'll look at person B and see them as high risk, a lot of recent negative history, patterns of missed payments and defaults, and maybe they'll get approved, but at a 12 to 15% interest rate for only $20,000. And again, that's if they even get approved at all. Same score, completely different outcomes. Why? Because the lender looked at the full credit profile, not just the 3-digit number. Look, credit repair doesn't just raise your score. It cleans up your entire credit profile, which makes you more qualified all across the board. We had a client who came to us with a 640 credit score. Not terrible, but also not great. He went ahead and applied for a mortgage and got denied. Not because of his score, but the real estate agency said it because he had 4 collections accounts on his credit report. The lender said, we can't approve you with all of these active collections, even though your score is above our minimum threshold. So what did we do? We cleaned up his credit, we removed all 4 collections, and since they couldn't be verified, they had to delete them. His score went up to 715, but more importantly, his profile was clean. He reapplied for the same mortgage, the same lender, and got approved for a 3.8% interest rate on a $400K house. That's the difference between a messy profile and a clean profile. Clean profile equals approval. Messy profile equals denials or terrible terms. And here's the simplest way to explain credit repair to anyone. Think of your credit report like a financial background check. They run a background check just to make sure that everything you put on your resume is actually accurate and you are who you say you are. If your resume says you worked at a company from 2018 to 2020, but the background check comes back that you worked there from 2019 to 2021, then that's a discrepancy and they're going to question it, and they might even deny you employment based on that inaccurate information. Your credit report works the same way. It's like a financial background check or a financial report card, or some people might even call it a financial resume, and it's used to decide whether you get approved or not. Credit repair doesn't lie. It doesn't hide information. It doesn't cheat the system. It simply says, if you're going to judge me based on this report, you better make sure that the information is 100% correct. And if you're going to deny me based on something that's in this report, you also better be able to prove that the information is accurate. And that's it. That's the entire concept. And just like that, you have the right to dispute inaccurate information that's on your credit report. And that right is protected by the US federal consumer laws. You're not asking for a handout. You're not asking for forgiveness. You are demanding accuracy, and you cannot argue with that. It's your legal right. So what's the end result of proper credit repair? Well, here's what you're looking at. A credit report that's actually clear of all inaccurate negative remarks, no more collections that couldn't be verified, no more late payments from accounts that are actually paid on time, and no more duplicate remarks inflating your debt utilization, and higher approval odds all across the board. When lenders look at your credit profile, they see a clean history, they see someone who's low risk, and that means that you get approved for loans that you otherwise would have been denied for. And don't forget, of course, lower interest rates on everything: car loans, mortgages, personal loans, and even credit cards. And all of it becomes cheaper when your credit is clean, which is going to yield you saving much more of your hard-earned money. We're talking about thousands, sometimes even tens of thousands of dollars saved over the life of a loan. Not to mention access to 0% interest funding. Once your credit score is in the 700 plus range and your profile is clear, you start qualifying for 0% interest credit cards, promotional financing, and even balance transfer offers, which are all tools that people with good credit use to manage their money without paying more than they should. If you're looking to move, well, you'll get better housing options. No more getting denied for apartments. No more massive security deposits that are more than your monthly rent. You can actually choose where you want to live instead of just settling for whatever you can get. And when it comes to transportation, you get access to better vehicles. You can lease or finance a reliable car at a reasonable interest rate instead of being stuck with a 15-year-old hoopty or a 22% interest rate at a buy here, pay here type of car dealership. And how about the opportunities that you've been locked out of for years? You want to start a business, you want to get approved for a business loan or a business credit card, or maybe you want to invest into real estate. You can actually get approved for all of these things now. And most of all, better credit comes with less stress. This is the part that most people don't talk about enough. The mental and emotional weight of bad credit, the anxiety of every time you apply for something, and the embarrassment of getting denied all disappears. The frustration of watching all of these life opportunities pass by because you don't qualify is gone. And when your credit is clean, that stress is completely eliminated. You know that when you apply for something, you're likely to get approved. You know that you're going to get fair rates. You know that you're going to have multiple options. And that's what happens when credit repair done correctly gets you. Not a quick fix, not a band-aid solution, a clean, accurate, legally sound credit profile that opens doors instead of closing them. All right, so let's quickly recap everything that we've covered today in this video. Credit repair is the legal process of making sure that your report is accurate, verifiable, and compliant with the federal law. It's backed by 3 major federal laws. The Fair Credit Reporting Act, which requires 100% accuracy. The Fair Debt Collection Practices Act, which controls how, when, and if debt collectors are allowed to contact you and report a debt. And 3, the Fair Credit Billing Act, which protects you from billing errors. Credit repair targets inaccurate negative items like late payments, collections, charge-offs, repossessions, bankruptcies, student loans, medical debt, and even hard inquiries or incorrect personal information. It also includes accounts that are duplicated, accounts that don't belong to you, and outdated info. It protects you financially by lowering your interest rates and increasing your approval odds. It protects you by legally forcing creditors to prove their claims or they have to remove them, which eliminates the exposure to lawsuits, wage garnishment, and bank levies. When all this is done properly, credit repair gives you a clean credit profile, better approvals, lower interest rates, access to 0% interest funding, better housing, better vehicles, opportunities you've been locked out of for years. And most importantly, it's 100% law-based. This is not about excuses. This is about demanding accuracy and forcing compliance with the federal law. And you cannot argue the law. The law will always be the law. So if you're ready to clean up your credit and stop letting inaccurate information hold you back, here's what you need to do. Go to the description of this video right now, where you will have 2 options. One, you can click the first link and message me directly on Instagram. And once again, you're actually going to be speaking with me, not some sort of AI robot or chatbot. And we can have a genuine conversation to determine if working together is a good fit or not. Or if you want to get directly to the point, click the second link in the description and you can go ahead and book a call directly with my team. If you do message me on Instagram, just send me the keywords repair YT and I'll know that you came from this video. And we'll have a conversation about where you're at and where you're looking to go. And we'll dissect your entire credit report to determine whether it's actually going to make sense for us to work together or not. Either way, I look forward to connecting with you to determine whether we can help you take your credit and your finances to the next level. We've helped over 1,300 plus clients clean up their credit report and achieve real, long-lasting financial freedom. We understand the laws, we've perfected the process, and we simply get results. So if you're truly serious about your credit and financial goals, reach out to us today. And if you got value from this video, please do me a favor, hit the like button, subscribe to the channel, and drop a comment below as it would help the channel grow tremendously. Let me know what your biggest takeaways were, or if you have any questions about credit. I actually read and respond to each and every single comment. All right, that's it for this video. Thanks for tuning in, and I'll see you in the next one.